Welcome, guys. So this is the first part of many series, okay, where we're gonna learn about the robots, the fundamental of the robot that I'm using, and of course, I'm showing you this transparently on my FX book. So this is really a journey which I'm starting. I hope you can join me. Just follow my Facebook, follow my YouTube channel, follow my Instagram, so that you know what I'm doing regarding the robot. And the overall framework that I call this robot is called Natalia. And under here, there are actually various trading robots. I'm going to tell you which ones I'm using. And of course, if you know about robots, automated trading robots, the good thing is about automated. The not so good thing is you actually have to have some knowledge on the setup in order to get it going. And you have to have some really rather you have some basic Forex knowledge, but you have to know at least how Forex works, and then you let it auto trade, okay? You let it auto trade. So, you know, to me, running a robot, this is like running an F1 car, really. You have an F1 car, there are different types of models. You have to know how to operate each robot. Each robot has to be independent of one another. Really, when you talk about operating the robot, to me, it's like driving an F1 car, okay? You know, there are many types of teams there. So, you know, one robot could be like a Ferrari, right? Very fast straight line speed, but it struggles on the corners. The next one could be like a Mercedes. Yeah, I know you guys like Lewis Hamilton, right? And that could be great on the corners, but lack in straight line speeds. Of course, some of them could be like the McLaren or the Red Bull. I want to be Max Verstappen. So each car has its own advantages, and you have to suit it for the circuit, right? Like some fast circuits, like in Monza, really, where there are a lot of straights, then the Ferrari would be in an advantage. But still doesn't mean you win, because you still make mistakes. Hey, I mean, that's enough said, okay? You've been making 2.5%. I'm gonna get you banned, man. You see, be careful when you're driving the car. Know what you're doing if you want to operate a robot to be successful. Do not expect one robot to do everything. Now, the fundamentals of the robots that I'm using is actually grid trading. So you see a lot of grids here, and we're gonna go through this journey where I describe to you the fundamentals of what we're doing. You can try it manually if you want to see how it works, and then I'll also explain to you what solutions automate the process, and then we will actually go through each of the solutions to actually see how they're performing, so that you yourself can select which one you think is most suitable for you, and you can even see my settings on how I get the results that I'm getting on these robots. At the end of the day, I hope that by following me, you can yourself start building a system for yourself that can allow to make you financially free eventually. But at least in the interim, you do get some income, you know, starting from a small account and going up slowly. You do get some income on the small account. You're more comfortable with this system, and then you can actually implement this full-blown system on your own solution, okay, on your own platform or trading computer. And this is really what we want. The idea is to help people like you, you know, the man on the street, to get extra income. So the basic about a robot, really, it's actually a grid. It's really trading on a grid. So, you know, you ask, hey, what's a grid like? What is a grid? So you need to understand this. I urge you to even try it manually, because I needed to try it manually so that I know how it works, so that, you know, when it comes to the actual robot setting, I actually know what I'm doing. So, you know, you need to know the fundamentals of robot trading. So just to make it simpler, it's basically a grid, okay? This is an example of a grid. I've tried to make it as simple as possible so you guys know what's going on, because once you understand this grid concept, then you can understand the further videos where we do actually some settings on the robot. And, you know, when we have weekly reviews on how to set the robot, depending on the market condition, you know what I'm talking about. So this is an example of a grid. Let's just say that this is for the pair of Euro USD. And let's just give an example that at this time, Euro USD is at 1.100. So going up, you can have several grids going up and several spaces going down. I could just put here 3, okay? And each step here is actually 12 pips, 12 pips, 12 pips. So what this means is that as you move up here, it's 12 pips, and the prices here is like 1.10, right? 1.1012. As it goes up here, it goes 1.1024, and it goes up further, it's like 1.1036. Similarly, down here, you just minus 12 pips, 12 pips, 12 pips. So it goes 3 up and 3 down. That means up, it can go around 36 pips. Down, it goes around 36 pips. Now, you can have it up to 10 here and 10 at the bottom, which means on the top side, the grid can travel for about 120 pips, being this amount of 10 times 12 pips. Below it goes also 120 pips. So just set up this grid as a reference price. And when you're trading in the grid, once you have the grid ready, then what you need to do is basically put in the entry orders, okay? Put in the entry orders so that if it's triggered, then your grid is fired and basically ready to go. So in order to describe that, let me clear the drawings here before I continue so that you guys don't get all confused about this. So really, what is the advantages of grid trading? There's a lot of advantages. I think the most important advantage here is that when you do grid trading, it allows you to go in position slowly. So it's really kind of non-directional trading, because when you're in Forex, it's not easy to get the direction right. You know, you have to use a lot of indicators, you know, I've seen charts full of indicators. You can use naked charts, but you have to be highly skilled to use that, and not many people are really skilled at using that. However, if you do a lot of indicators, most likely, especially you're a newbie, you are going to get confused. And we know the nature of the Forex market, that sometimes it just tricks you into believing there's a lot of whipsaws, there's a lot of fake outs, right? So this is an issue now. A grid allows you to basically take trade in a very well-disciplined manner. So it also allows for event trading with a predetermined TP, target profit, and also a stop loss. For example, if the price is currently here and you basically expect the price to go up or to go down, doesn't matter which way you go, what you can do then is basically start building the grid here, right? So you build a grid at the bottom here, you build a grid at the top here, and no matter where it goes, it will hit your grid and trigger your entry order. This is a much easier way than you actually trying to guess, or rather trying to research the direction of the pair and getting it all wrong. And we know how news can be very volatile. For example, a very, very sensitive news like the NFPs, non-farm payrolls, or the United States interest rate decisions, or even rate decisions from the European Central Bank, and even the British Central Bank. So you know that how important it is that the role of the central bankers play is very, very important. And you're going to hear a lot of things about, you know, names like Mario Draghi, names like Powell, yeah, he's very popular with Mr. Trump now, and also the head of the Bank of England, Mike Carney. Now, the next thing is very important, is you need to determine the purpose of the grid. I mean, make sure that whatever you do, your grid has a purpose. You know, that is the only way where you can basically determine what you want the grid to do. So it can be an event-based grid trying to capture events. It can be a trending grid. That means you catch the Forex pairs as it goes up or goes down. Or it could even be a channeling grid. You know, the Forex pair might just channel and basically go nowhere. It's basically in a range here, and you try to capture these movements. So make sure you do this. Now, another thing that I do want to emphasize, that if you are going on grid trading, and we're going to see some examples afterwards, is you need very, very low spreads. Okay, you really can't do it on high spreads. These spreads here must be very, very low. There must be low slippage to execute. Of course, you can follow the broker that I recommend, which is Handtech Global, and I've seen their spreads to be very, very low. Of course, there's a lot of work, and sometimes, you know, you have to really consider using an expert advisor, a robot, which will automate the entire process. But again, as I have said so many times before you even go to a robot, just try to do this manually, so that you at least you understand what's going on.
So here are some examples of a grid that I've studied, and I would encourage you to really try this. For example, what you could do here is basically take a trade at this, whatever the price is. Say you are trading like a euro, a USD. To make it simple and to make it easy for me to count, say it's 1.100 at 12 pips, which is 1.012 up here. Let's see, 1.1012. You have a trade, this is like a buy stop, right? 1.1024, 1.1036, and so forth. And what you can do here is that if it hits this, you put a buy entry stop here. So what you could do is basically, as you are continuing to travel this grid here, you just make a buy here, and then you make a buy if it hits here, you make a buy as it sits here. Now, there's something that I'd like to tell you that's called a hedged grid, okay? This is an example of a hedged grid. I'm just going to draw here just an example here. So it basically tries to take advantage that prices of Forex will basically move up, then move down, up and down. So what it does really here, and yeah, move up and down like that. So what it does really here is that, it would take this trade if it basically triggers. And as the pair goes up, okay, you might take a trade here even. And as the pair goes up, every 12 pips here, you could basically take profit. And you could here take profit. And you could here take profit. Now, if it hits all this, guess what? You get 12, 12 plus 12 profits each, so you kind of get 36 pips here. But in order to protect you from, if it goes down, of course, then you don't do anything, right? So this protects you from whipsaws, because if it goes here and even it goes back down, guess what? You already booked 36 pips in profit. Now, something that can be done here, for example, if you do take a profit here, if you are triggering a trade here, let's clear this up again so that you can see easier here. If you are taking a trade here, you have 12 pips. This is like 12, and this is another 12. So you take a trade here, okay? You take a trade here, or you can even take a trade up there. So you basically take a trade here, and once it hits 12 pips here, you not only buy here, okay? You also sell. So you do a buy and sell simultaneously here. So as you go up 12 pips, 12 pips, 12 pips, guess what happens here? Say you just hit this third leg on the grid here. Of course, you can do a grid as long as you want. So here you book the profit of 12 pips. Here you book the profit of 12 pips. Here you even book a profit of 12 pips. But guess what's happening here? As you go up here, you're booking 36 pips of profit. Now look, you take a trade here, you take another trade here, you take another trade here. Guess what happens here? You're also buying and selling at the same price. So basically, as you're booking all these profits as you go up, you also have a negative sell here, right? You also have a negative sell, you're losing here, you're losing here. From here to here, you're losing 12. Here to here, you're losing 12. Here to here, you're losing another 12, because it's just the reverse of all these things. But guess what? As if the trade goes down like this, because we're in a range now. If the trade goes down like this, guess what? You're going to get this 12 back, this 12 back, this 12 back. That should be green, actually. So all in all, if the grid goes up and then the grid goes back down, guess what? You book this profit, and you also book that profit going down. That's just example of a grid that I'm just describing to you. It's basically called a hedge grid because everything is hedged. Now, the problem is, of course, if it keeps on going up, then we do have a problem, which is why I said that when you talk about grids, you must make it really focused. What I've done for you here is basically I just put in a grid here that is just that assumes that things are really going to go stay in a range, okay? Yet another example of the grid. So since we kind of went up just now, let's assume that we're kind of going down now. So, so just give it turn. So just say we are not going up, but we're trying to make money by going down here, okay? By going down this grid, traveling down this grid like that. So let me draw it for you so that it becomes crystal clear, because it's not easy to understand this. But the best way really is to try and basically draw this out by yourself, and to try it on the computer or on your phone. Actually, just put in some orders. So really, as far as the grids are concerned, it can be going up, and it can also be going down. So here's another example of another grid that you can really play around with. And the good thing about grid, you can long, you can short, go up, go down, or even both. Of course, harder to go both. But another example is going down here. I could basically put in an order here to short the grid here, and once it hits 12 pips, I might have what? I might have a 0.1, 0.1, so if it goes down by 12 pips, maybe $120, but that's a bit too much, right? I might have like a 0.5, right? 0.5, say the sizing is 0.5, so it goes down, I make like $60. And if it hits this target profit for the next grid as it travels from here to here, it's also a 12 pip grid, but then I can go down here and I can increase the lot sizing. Okay, I can increase it to 1.0. So if it travels another 12 pip, remember I've taken this profit already, I'll get 120. And of course, if it goes down some more here, I can even increase the lot size to 1.5. And it goes down here, I make more and more money. That means I'm just pyramiding the position and increasing my lot size as it goes down and down, traveling here. So these are some ways you do it. And if you go both sides, which is positive here and negative here, basically speaking, is you can make money anyway. If the market goes here, you make. If the market goes here, you also make. Now, another factor about grid is the time frame. Okay, if you are running grids and you want to run a lot of trades here, you can select the time frame. Of course, if you are on an M5, which is 5 minutes, it does a lot of trades. If you are on an M30, it does less. If you are on an hourly grid, which is H1, then it does even less than that. That means you're only allowed a trade. It looks whether it's suitable to do a trade based on the time frame, whether M5, M30, H4, or even daily. Of course, daily you will rarely have the trades here, right, on a daily chart, but that's okay. So it depends on the risk level. Of course, if you want very fast trades, you would try to evaluate the grid every 5 minutes. So it's really up to you on what you want to do. But I'm just showing you that there's a lot of parameters here. So it's not as easy as it is, but you can try it out so that you can see the complexities. Yes, in theory, it works very, very well, but the results that I got were not that encouraging. And there's a lot of disadvantages of the grid, not because of the grid itself. I think the grid is really one of the best ways to trade. It's the management of positions. As the grid gets bigger and bigger, there's so many positions. You got to key in so many grid positions. Then you got to manage those things. Large spread could destroy your grid. And Forex, the main problem is slippage from vendors. Well, that could destroy your returns. And of course, you have some issues of even brokers doing stop hunting, right? So depending on your strategy, a grid could also go haywire. For example, you're in a grid that tries to take advantage of the channeling, right? You make money here and it's hedged out, and you make both sides when the market goes down like that. But what if the market goes like that and breaks out? Then you got a problem if you're in a grid like this. On the other hand, if you're in a grid that takes advantage of breakouts here, if you are stuck in the channel, then nothing pretty much happens. So these are conditions which are not good. So one of the things that you're going to do is really control profits and also control the risk management. So this is not easy to do. And I'd rather have an automated system to do this, because, you do not want emotions to come in the way here. You know how emotions are really the big problem for Forex traders. They're really the spoilers for Forex traders because we're emotional people, okay? So this is where I feel that the use of an automated, okay, a really automated Forex robot is important. But I'd just like to say that I like focus robots, okay? I like focus things. I don't like things that try to do everything because it really doesn't work. I like it to be focused. I like it to be an expert system. Yeah, a real expert system versus a jack of all trades. This is what we do not want, okay? We don't want a jack of all trades into this. Our money is too valuable to leave it to a jack of all trades. We want an expert advisor or whatever to handle this robot. So these are some movements that you see in Forex. You know, this is the Elliott wave, wave 1, wave 2, wave 3, wave 4, wave 5, and then ABC going down. So the good thing about this, you know that Forex moves in waves like this, right? It goes up and then it goes down, it goes up and then it goes down, it goes up and then it goes down. So it's kind of like a channel, you know, so as long as it moves within a channel, so there is a channel here, up here there's another channel, and even when you move down like that, there's another channel. So as long as the other channel, a grid that has the advantage of being able to go up and down, can actually make money here, can actually make money here, and can actually make money here. And this shows you an example. Even if we go down here, right, we kind of go down an impulsive wave here, and then what we do is we correct or we consolidate here, we go up in an impulse, and what do? We correct down before we break out again, and even then there's a channel and it goes, you know, it goes in waves. So this is good, but here's the issue now. If you have a grid doing this, a grid that's programmed to do this, you know, you could have a grid that takes long positions here, and then, you know, you basically build drawdowns, but as it goes back up here, you then recover the drawdowns and in profit, back in profit again. As it goes down again, it could be a drawdown, and then as it goes back up again, you're in profit again. So again, as long as it's channels like this, it's okay. But what if, you know, what if you have a grid that's designed to do this? What if it blasts up like that or blasts down like that? This is a big problem because here you can lose a lot of dollars, and you know, when you have risk management, this would result in losses for your grid, okay? And you know, once you lose, it's really a problem to recover, because let's say you're starting out with $1,000, you go to $1,200, that's about what? That's about 20% gain, right? $200 up. But what if you have $1,000 and suddenly your grid goes down to around $800? Now you have a problem, because you know why? To return this 800 back to 1,000, you need a gain of 25%. And that's not something that's easy to get, okay? So you really got to manage all these grids. They can't be left there and really execute under market conditions that can change a lot, because there's a lot of volatility in the market that can send the pairs out of this channel, and these are extraordinary events. And now, you know, there's a lot of extraordinary events because you can get all these planned events. You can see them in Forex Factory, but there are also events that are not in Forex Factory. So really, if you want a grid, you know, you can have a grid, a robot for channeling, and this is good if it goes through ranges like that, even goes through ranges like this. And you should have another one that's designed for breakout to go up or down. This keeps it separate, okay? So you know that something goes like this, it can take many, many trades, okay? It can take many, many trades and just make money while you're in this range. While a robot for breakout, it'll basically have to wait for an event for the breakout down here or the breakout down there, and it might, you know, it may take a longer time for it to trigger, really. So this is a one-way trade only, whereas this is multiple ways trade. In fact, you can actually adjust the parameters of the robot, whether it goes one way or both ways. So you know, for this type of grid, the channeling grid, you know that if it goes up here or does that, it must be able to survive drawdowns. Whereas for the breakout grids that only trigger when you have breakouts like this or like this, it must survive whipsaws. And I think you see a lot of whipsaws in Forex, right? Forex can go up and down, and then it can really go back into the grid. So this is going to kill your gains, okay? It does that U-turn. So you really have to be aware of this. And I think one of the factors here that are causing all this volatility is call Mr. Trump, because he appears outside of the normal Forex Factory hours he appears and just suddenly announces a news. Or even you see a lot of geopolitical problems now, whether it's the attack on the oil facilities of Saudi, and even the Turkish incursion in Syria. You know, they've just attacked all these Kurdish cities that were under ISIS. So that even could cause a problem in the market. So you really got to look at all that in order to survive, you know, in order to make sure that your Forex grid survives all these attacks. So, you know, what I do is I use a robot, and the robot expert advisor comes from RISMI Trading Solutions. They have a family. Actually, they are not only one RISMI, you know, there's a family of robots that's good for range trades. There's a robot that's good for breakouts, and even have another robot for cryptocurrency. So these are very intelligent. These are robots that were previously used for the wealthy, okay, for fund manager and all that, and they've managed to actually bring it down to us, the common people. So RISMI takes after Al-Khwarizmi, or Musa ibn al-Khwarizmi, who was a very famous mathematician, who was a Muslim mathematician during the glory days of Islam. He was also looking after the Baghdad library, which, you know, at that time was really the source of knowledge for really the entire world at that time. He's the father of algebra, okay? And he's also the father of algorithm. And what we're doing now with RISMI is really something that's called algorithmic trading. So I think this is something that's really, really appropriate. And you just have to love this guy, okay? He is the father of algebra. He is the father of algorithm. And RISMI, in RISMI, the product RISMI, we really have something here that symbolizes all this, okay? Because all of these are algorithms. And so you follow my YouTube, you follow my Facebook, you follow my Instagram, you will see me doing all of this live and really showing you the results live on my FX book, so that you will be able to understand how this works. And also we're going to have weekly reviews where I will even show you the settings that I use to get the results. And it's all of this that's important, because, you know, if you want to do it all alone without knowledge of Forex, it is going to take time. It's going to be quite difficult, you know, because as I said again, a robot can't be left alone. So that's it for now for the first series of the trading robots. I'm going to see you in the next video. Okay, guys? Okay, guys. Thank you very much. See you later.
You want a low risk strategy easy so that you can do whatever you want to do in life. It's basically about freedom from time. You still need to have knowledge on how to set it up. You still need to have understanding in Forex to know how to set it up and change your pairs from week to week. But a low risk strategy that's capable of giving you like 5 to 10% a month, and you see the results here on my FX book, is going to give you a lot of freedom, because you don't have to think that much. Basically a 1 week review on knowing what's going on in the markets, okay? And then you can finally do what you want to do, whether, you know, you want to travel, you want to go to exotic places like I do, not having fun, but I like meeting a lot of people, making new friends everywhere, really working on partnerships with other social media influencers. That's really my cup of tea. So I just like to go around, and having a robot allows me to do this. Having an EA allows me to do this, which I can then mix and match the strategies in order to get the returns that I want. And that's all that it's about, okay? It's basically having the knowledge to operate the F1 car, as I said, so that you are able to meet your financial goals in order to have the life that you want, the life that you are designing, not really being a slave in the corporate world, which I was before, and you could be, or even struggling like a small-time businessman to make ends meet. It's time to take control of your life, and this is one of the best ways to do it. And the best thing is that you can actually see the results that I'm getting on my FX book. Nothing is hidden here, okay? Because again, I'm very serious about you being successful in doing whatever you want to do.